Harsh, take it away.
Well, thanks so much for that, Samina. Let me first start off by, really highlighting that over the year-to-date period, the Nifty Bank has done absolutely nothing. So it's a zero return kind of an index where the Nifty has returned 4%. So there's been an underperformance visibly. Let's pull up the names and see where that underperformance really is coming from. Roughly 80% of the Nifty Bank is about 5 names. You've got HDFC, ICICI, SBI, Axis and Kotak. And you look at the year-to-date returns outside of SBI, not really sizable returns across the board. ICICI may be a positive 10 and Axis may be a positive 5. But what is more interesting is the 5-day move, because that seems to be the election impact as such. 6% down on SBI. Outside of that, really no major moves despite all the volatility that we've seen. Pretty much flat across those other 4 constituents of the Nifty Bank. Let's pull up the Q4 numbers to try and understand operationally how have these banks been doing. And what we really seem to be coming down to is margins continue to expand in a tough environment. Outside of ICICI, you look at those small increases in margins despite a very difficult deposit environment. That increase in margins is definitely a positive, and PAT increase on a high base also a positive. ICICI Bank a wee bit lower, but no concern per se overall, even for an ICICI Bank. So that's very, very positive. Let's pull up the growth numbers. And I've had to take these sequentially only because of HDFC Bank, that being the culprit, largely because HDFC Bank year on year is not a comparable. And therefore, loan growth, what you're seeing is holding up. But look at the deposit growth numbers, marked increase in deposit growth numbers. You can clearly and visibly see the focus now coming back to deposits. And despite that growth number, margins have held up. So very interesting set of numbers that we've seen in Q4. Last off, let's have a look at the valuations before we look at the larger picture of flows. You're looking at ICICI, SBI and Axis trading at a slight premium, justifiably so. HDFC and Kotak have their own set of issues, but the upside is largely in HDFC, ICICI and SBI currently, is what the 12-month average from Bloomberg seems to be suggesting. Now, onto the flows, because we've seen $1 billion of outflows only within financial services in April and in May. So there could be a case where if financial services or if FII flows were to come back, financial services being 40% of the Nifty in terms of weightage could warrant a higher contribution by FIs and could be on FI radar. Therefore, could be a case that if FIs were to come back, this particular pocket may do particularly well.